Cindy Thomason. I'm the founder and president of Bookskeep. We're an e-commerce accounting firm that specializes in profit first, where we help our clients with cash flow management as they're growing. So this client was an e-commerce client serving the wellness industry. They were selling on Amazon and Shopify. They were doing mid-six figures and were growing nicely year over year. So as I mentioned, Bookskeep specializes in profit first and helping our clients with cash flow management. And that's what profit first is really all about. We have a methodology to help our clients manage the cash that comes into their business to ensure that they're setting aside money for their growing inventory and paying themselves, setting aside money for taxes, etc. So they have a purpose for the money that comes into their business, and they can easily see how the cash is working for them in their business as it grows. The client was always bought into the profit first methodology, and she went into it with both feet. And she was putting money aside to buy inventory. She had an inventory bank account. She also had money growing in her profit account so that she could weather any kind of rainy day situation and also take money out for herself every quarter as part of her profit distribution. So she was preparing for a rainy day. And unfortunately, the storm hit. For those of you selling on Amazon, this may sound familiar. My client had sent in her inventory. It was around $12,000. And then she got a notification from Amazon that they had lost it. So luckily, my client was using profit first, and she had been setting aside money in her inventory account to be able to reorder inventory, which she did. She ordered the second round of inventory and she sent it into Amazon. And here's where the storm hit again. Amazon lost her second order of inventory. So luckily, Amazon did find the product. They found both orders. She was fully stocked at that point, and she never actually ran out of product. But as soon as she was kind of over that hurdle, Amazon suspended her account and she was not able to sell for 11 days. My client had been doing profit first for a few years. Not only had she built up money in her inventory account to be able to buy multiple orders of inventory at one time, she also had built up money in her profit account to help her get through this rainy day period. She was able to basically continue her business and pay herself as she normally would, because she had those funds set aside. And when her account was reestablished, it was back to business as usual. And this was a frustrating, inconvenient time for her, but it wasn't a time where the ship was going to sink. The reality for many businesses that aren't using profit first is having to outlay the cash for 2 rounds of inventory orders, as well as then having their business shut down for 11 days. Those situations could literally kill their business. Glad to report that this story does have a happy ending. This was a great business that had a great product. They continued to grow for a couple of years. They had excellent accounting practices, and they used profit first. And recently, they were able to sell the business for a great valuation. So now this client is able to take all that she was able to learn and invest in her new business that she's hoping to grow and repeat the process.